everybody. My name is David, and I'm going to be talking to you today about the head and shoulders pattern found in an uptrend. This is a indicator that will signal that price, which is currently in an uptrend, will reverse to the downside, and I will teach you how to become profitable from it. So, first of all, I created this trend. Price on a 4-hour time frame has been in an uptrend for quite some time. As you can see in this chart, price did break out here, and this is going to be the right shoulder, which we're going to be talking about very soon. What had happened was price broke out of this trend, came back to retest it with a rejection, and then which resulted in price dropping about, let's see here, about 100 pips. So in the Forex market, as you may know, 100 pips with a standard lot is about $1,000 profit. So you can only imagine the potential for profit if you were able to accurately predict this movement. And today I'm going to be showing you how to predict this movement and when to place the trades as a head and shoulders pattern is forming. So first you want to identify the trend line. So the trend line in this instance, because it is within a trend, head and shoulders come in many different shapes and forms, but for the most part, you do want to identify four main components of head and shoulders. And so first, I will be showing you, So this is going to be the left shoulder here. This is fully formed. This is going to be the head. It's fully formed. You want to ensure that these main components have completely formed before placing your trade. And then this right here is going to be the right shoulder. And this is fully formed. This trend line actually represents the neckline. So what we want to wait for is how price reacts to the neckline before placing your trades. So for example, since we've identified these four components, we can now safely predict what is going to happen. So in this candle here, for example, we can see that price did break out of this trend, and as you can see, price has failed to break above here. This is signaling. This indicates the resistance. This down here represents the support, but in this case, this is also the neckline of the head and shoulders because now price has fallen out of this trend, and you can see it broke here. This is where you would have likely placed your trade here with this candle. This is signaling another rejection. However, it did do this 3 times. So this rejected the trend line 3 times, or the neckline rather, and then which then resulted in a 100 pip drop. So now that we've identified the four main components of head and shoulders and what had resulted, I'm going to be talking to you about how to predict this movement, let's just say on this candle. As soon as we've identified that the head and shoulders has fully formed, I'm going to be showing you, I'm going to break down into a smaller time frame what exactly happened, and then I'm also going to be showing you where to set your stop losses and where to set your take profits based off of higher time frame support and resistances. So going back to what had happened after it broke, so this is the neckline. This is also the support. So as soon as it broke out of the support and came to retest it and reject it here. As you can see, price did not go above this level. So now this support or neckline is now the resistance. So this is support turn resistance. We can safely say that this is typically where we're going to be setting our stop loss. So where we would set our stop loss, we would then find a horizontal resistance. So I'm going to be using a rectangle here. I like to use a higher time frame because it's more accurate. Using the 4-hour time frame, we're going to be finding major support and resistance levels that price has come to retest or test or interact with a couple different times. That's how we are able to identify a strong resistance and support level. So I take a look here. I'm actually looking around where price broke out, which is where it rejects typically, is where you can place a resistance level, and then we would find confluences within that initial analysis just to get more confirmation that that is a good resistance level. So I'm going to be making a resistance level here. As you can see, price did reject here, here. It also rejected here as support 2 or 3 times on 4-hour candles. And this is actually where price broke out and retested and rejected to break down into the downside. So next, in order to set your stop loss, you want to You could even break it down into a 15-minute time frame or 30-minute time frame. This is all just according to your risk management, how much you're willing to lose. So that's really up to you. I typically set my stop loss about 10-15 pips above the resistance level. So you always want to set, if you're selling, you want to set your stop loss above the resistance level, and then you also want to set your take profit around major support levels. But you could also break it down into like take profit 1, take profit 2, take profit 3, etc. Just wherever you're comfortable taking profits. I like to swing trade, so I'm looking for, the 50 to 100 pip movement. So I'm looking here at the support where price actually came down, rejected, and then broke all the way back up to retest another resistance level, but we'll talk about that in the future. So for now, I'm just going to be drawing the support level here, and this would essentially be where you take profits. So I'm gonna outline it here. Let's just say at this candle is where I entered. I would set my stop loss, and then it'll tell you too how many pips you're willing to lose. So I would be setting mine actually at a minor resistance level. So this is about 16 pips, and then I would take profit about here. So this is a 1 to 6 risk to reward ratio, which is really good. Sorry, let me fix this here. The reason why I set, so let's just look at this. You can also set, you can draw this out, and you can see that price did interact with this several different times. This is typically a good, because price, if it does end up breaking above or coming to retest the trend line, this is only just a couple pips above where you entered, let's just say. So you're not really risking a lot for such a large movement. So the risk to reward ratio is good. As long as you have good risk management, you should be very profitable in a trade like this. Okay, so we're going to be going into a 15-minute time frame, a lower time frame. We're going to be identifying where we would have entered the trade, and we're also going to be breaking down um, basically what happened before the move. So we're going to be looking now at before the move and how to predict the outcome of the move and where to set your stop loss and resistances based off of a 15-minute time frame. So all of this that you see on the chart now, we're just going to pretend that it doesn't exist. So I'm going to actually be blocking it off with a vertical. So let's just say around here. So let's just say price is here. This never happened. Let's go into a 15-minute time frame and see what happened. So we're looking at the 15-minute time frame. I don't know if you can see this vertical line, but we're just going to be looking at basically what happened in this area, ignoring price action on this side. This is what's to come. So what we should have already done is on a 4-hour time frame, we should have already identified the support here because this is still a strong level of support from the past. Even breaking down into, let's just say, a 1-hour chart, we can see that price has interacted with this level multiple times. So we would have identified this as a potential take profit for the move to come after the head and shoulders had fully formed. But let's just say we didn't know when we were making additional minor support levels, we could identify here that this is a support level. Let's put it here. So let's just say here. So even so, let's just say we were to enter and we didn't really know where this pair was going to be. We could set this as our first target because price has interacted with this level multiple times, rejected. It's safe to say that this is a minor. It's still kind of a higher time frame. So this is still more reliable than, let's just say, a 15-minute time frame, for example. But let's hop back into the 15-minute time frame. So a lot of traders will make the mistake of entering right away. So let's just say you did enter and that was at, let's just say, 71.90. You entered as soon as it broke out of this trend line. As soon as the right shoulder had fully formed, it broke out. Let's just say that's at 71.90 and price dropped all the way down to this minor. This is like a 15-30 minute time frame support to 71.70. I mean, that's still 20 pips profit, but let's just say if you were a swing trader, I mean, if you're a scalper, this is good to be in a position where you're profiting 10 to 20 pips. This is perfect for you, you know. So, but let's just say you're swinging for a longer position. You want to be in the position a little bit longer. Where would you take profit? So since we've already drawn on the 4 hour time frame a higher time frame support, we're targeting 100 pips. We want to hit 100 pips because let's just say you're trading one lot, that's $1,000. Two lots is $2,000, so on and so forth. So we want to wait until price comes to retest this resistance at least twice. So it broke out, yes, that's fine. Consolidation here, broke back up to retest, so that's one retest. So if you're selling and price did come back up, you'd get stopped out at break even. So you would be at a break even. You're not really making any money. And again, this happens once more. This is where you typically want to enter. So if you entered here at 71.90 area, your stop loss is 72.05. So that's about 15 pips or whatever you're comfortable with losing. If you want to lose 20 pips, if you're willing to risk 20 pips, that's fine. You could put your stop loss up here on another smaller time frame resistance. But let's just say, so we've already drawn out our plan. We've already set our stop loss at 15 pips. We've set our take profit. This could be, this right here could be our TP1, which is, let's just say from 71.90, this is, let's just say we entered here. Take profit one is about 30 pips. I mean, one lot, that's $300. Two lots, that's $600. That's not bad. But realistically, we want to hit our final take profit on a major time frame, like the 4 hour support that we've already drawn. So what happens here? Since we were patient, we waited for the second rejection. Price is melting. So as soon as price starts to melt into take profit one, typically around take profit one, you could set your stop loss. You can move it all the way down to break even. So let's just say price did try to come back up, you'd get stopped out and you wouldn't lose any money rather than risking, the 15 pips. That's still $150 per lot, So, so as soon as price is melting into your take profit one, you could set your stop loss to break even, and then you can just wait for the trade to complete. So in this move, price did come back up, but it didn't even come relatively close to your entry. So you're still safe, you're still in profit. Price continues to melt, into your final target. Let's just say you had a TP2, it'd probably be around here where price came down into in the future, which is also along the trend line. This is another minor support level. Really any level along the trend line that matches a horizontal support or resistance is accurate. So you can use that in the future as reference. So around here could be TP2. I'll just highlight it so it makes it a little bit easier. Let me zoom out here. So let's just say here, again, we can identify that this is a strong support level just because price has been in this level multiple times. So we could just say that this is TP2. So this is TP2, typically around here. So let's just say you set your stops to break even around your entry. Price is here. Say price comes down into TP2. Let's just say you could adjust your stop loss or you could take profit here. I mean, even at this point, we're looking at from entry around 90. Let's just say at 90. This is still 58, almost 60 pips at $600 per lot. I mean, we're looking at a lot of money here. So, I mean, if you're comfortable with taking profits, you could lock that profit in. You don't necessarily have to wait, but you're still looking at, we're still looking at 30 to 60 pip movements just based off of this head and shoulders. Just waiting for price to break out of the trend line, coming back to retest a couple times. We're looking at lower time frames. We're waiting for the moves to happen. We're not necessarily rushing into trades. So just as long as you're patient and you're able to identify, be patient, apply risk management, you should be very profitable in trades like this. Anyway, thank you guys for watching today's video. If you found this video useful, please like and subscribe to my channel. I will be posting as much as I can more free content for beginners or intermediate traders on different aspects of trading in the Forex market, the crypto market, etc. But I hope to see you guys in the next video.